The Western European markets and the US are not going to make any significant changes to their existing rule book to accommodate Islamic finance. And I think the UK is a very good example where the FSA has the same rule book for a regular bank or a conventional bank or an Islamic bank. And any new player coming into the market, whether it be the UK or let's call it the European community, there are going to be no separate rules for Islamic finance and takaful. So anyone offering these products has to comply with the existing rule books and regulations. The challenge there is really not so much on the regulatory side, but more on the tax side. For example, in the UK in 2003, we eliminated the double stamp duty on Islamic mortgages, because normally the way it works is that the bank purchases the property on the behalf of the customer and then releases the property to the customer on a deferred basis till the customer has money to buy the property. So therefore the stamp duty was being levied when the bank purchases the property, and then when it resells it to the customer, a second payment of stamp duty was required. This the UK has eliminated. France has done the same thing. And so I think the tax aspects, for example, another example would be the interest payments on, or not interest payments, but the payments made of the profit on the sukuk. The question is then, how do you book it from a tax point of view in the UK? So these are more of an obstacle, I would say, than necessarily the regulatory framework for the Western world. The best example, I would say, would be London. The way that the political will in London to basically offer the choice to the customer has meant that there has been an initiative by the Bank of England and by the relevant market bodies in the UK to study the problem and to come up with solutions working with market practitioners. France has actually followed a similar model where the government is very keen to promote Islamic finance, and they have actually also set up working groups to actually look at the problems on the tax side, on the regulatory side, and see how they can be solved. And I think that's probably the best way to go, is to look, because I don't think there's going to be any European-wide out of Brussels, any regulations coming out to accommodate Islamic finance. Luxembourg today, for example, has two aspects. One is the listing of sukuk issues in Luxembourg are roughly about the same as London. And number two are Sharia compliant funds. There are 40-odd Sharia compliant funds which are actually in Luxembourg at the moment. The Sharia scholars in different countries have different views and different interpretations. It's difficult to standardize the Sharia interpretations. The Sharia law itself is common knowledge, but the application of those Sharia principles vary from one country to another. Saudi Arabia tends to be more conservative. Some people say that, you know, the application of these principles in the Far East are more liberal. Different countries take different views. I think that overall it's the quality of the Sharia scholar as an individual. There are a handful of about 20-25 Sharia scholars who are considered to be the celebrity scholars, which are in great demand, and they are on the boards of many different Sharia boards of financial institutions. And I think that will continue to be a challenge, to have more supply of Sharia scholars coming into the market who can actually relate both to the Western finance and at the same time Islamic finance. Risk management remains a key challenge for the industry. I think that the risk management practices need to be improved in the industry, and the industry is doing a lot about it, both in terms of documentation, in terms of standardization of documentation, as well as the professionals which is hiring to enhance its risk management practices. And that will be a continuous effort along the next few years.